Welcome. This is the Market Wrap. I'm Agam Akil. We've seen more weakness on the benchmark indices with the Nifty coming off by around 91 points now, down by as much as 1%, losing out on the mark of 10,900. In fact, inching back towards 10,800. So severe weakness seen here. Among the gainers, we have Sun Pharma advancing by around 2.9%, followed by Yes Bank and Z Entertainment. There's some gains in Tata Steel, Wipro and JSW Steel as well. On the losing end, ITC declining by 4% after its earnings coming through. Well, shareholders going ahead and selling stock after earnings, which were largely in line with street expectations. Grasim Industries, Indiabulls Housing Finance and Titan, along with Infosys bearing down on the index. Let's take a look at the broader markets. The advanced decline ratio or the market breadth is not very different from what we saw yesterday. 2 gainers for 3 losers. Granules India at the top of the gainers list, followed by something like an Info Edge. This is another curious one, looking at a spurt of as much as 6% on an intraday basis. Symphony continues to move from strength to strength. We have Dredging Corp of India, TTK Prestige, along with ILFS Transportation, all advancing in trade. ICICI Prudential Life were declining and closing near day's lows, down 11.5% on back of disappointing earnings. Reliance Nippon, Deepak Fertilizers, Repco Home Finance, all losing out, a little over 5%. But that said, let's get in our markets editor, Neeraj Shah, to get in his perspective. Neeraj, based on the moves that you've seen, what are your thoughts today?
Well, disconcerting the last 1 hour, I'm not saying that's probably the only thing. The world markets aren't exactly a very happy place, but we corrected quite a bit in the last half an hour. I think the market breadth also that you alluded to was almost flat until 3. And then suddenly, post ITC numbers, and not saying ITC is the reason, but post ITC numbers and that stock tracking about 4.5–5%. I think the breadth too worsened quite considerably, and which is why this 3:2 in favor of the declines. F&O volumes fairly high today, so I mean, interesting to see the trading activity that happened out or shaped up and the kind of shorts build up. You'll probably be a better judge of that. But yeah, heavyweights pulling the index down. We've been talking the last couple of days about how there are pressure points at higher levels for individual stocks and for indices, and that seems to be now settling in. Maybe the globe is a reason or the globe is a factor, difficult to say. But for now, looking wobbly. I think the experts that we spoke to, and you'll probably hear them as well, speaking about the Nifty Bank being an important monitorable going ahead. But yeah, the close definitely disappointing. Let's see if there are some near-term triggers that come in and
Neeraj, I just wanted to add that I'm really surprised by the move that the Nifty has made because of the heavy accumulation in puts in 10,900, 10,800 and 10,700. It seems that 10,900 has clearly been broken. We're inching towards 10,800, and this is a surprising factor element because of the accumulation that was there, where one might say that there was a lot more writing around those puts, but this will mean that unwinding of positions is likely to show up in the power copy today. I'm going to keep an eye on that one.
I'm sure,
but Neeraj, thanks for giving us that perspective there. But what about the technical levels? What are the technical analysts saying? This is what these are the levels that they're keeping an eye on. Listen in.
Yes, Nifty is completely sideways between 10,850 and 10,975, and it needs a close above 11,000 for further momentum. Until then, it is looking a bit heavy on the higher side, and it won't be prudent to take any fresh longs when it is on the higher side. So better to cut off longs and maybe even take a small short at those levels, but not at these levels. And again, near 10,850, one can try a long with the stop loss below, maybe another 20–30 points lower below that.
As of now, there are no clear signals of breakout on either side. On the options front, we have seen that 11,000 call option has the highest open interest of about 38–39 lakhs, and similar open interest has been seen around 10,800 put options as well. So 10,800 to 11,000, this is the 200 points range, and in which I think the index would continue to consolidate for next few trading sessions. So on the index front, even we are advising our clients to stay light and avoid trading the index as of now until we get a breakout on the either side.
All right, then let's talk about some stocks. I'm going to start off with ITC. Well, the earnings were, I would say, mixed, if not in line with street expectations, considering the stock declined by as much as 4%. And ITC, do remember, has a reasonable weightage when it comes to the Nifty, and possibly one of those stocks which also took the Nifty down. Now, in terms of earnings, we did see nearly 15% growth in its net sales. EBITDA margins came off quite substantially to around 38.5% against 40%, and that perhaps was one reason for concern. We've also seen net profit up 3.9% year on year. This was slightly ahead of expectations, but again this was largely on higher other income. We must remember that the base quarter had about 413 odd crores as an amount which was written back, which is why the profit growth number is slightly smaller. But we have to consider gross margins which declined by around 150 basis points, so there's clear pressure from inputs coming in for ITC. In terms of segments, we had cigarettes where we saw growth of around nearly 10%, and FMCG other, this is perhaps where we saw a little more disappointment. We did see about 11% growth year on year, but this was on the lower end of our expectations of 11 to 14%. And again, when it comes to your margins, again, the overall weakness seen is because of the pressure in inputs. So on the whole, it's been a mixed quarter for ITC, but we're going to have to wait and watch for more developments with respect to why ITC broke as much as 4%, but it's because it's not every day that the stock comes on, corrects that by that quantity. But that said, let's bring in and talk about more stocks which are in focus. We have Sharad Dubey who's joining us right now. Sharad, what are you tracking today?
Well, basically, Agam, a good set of numbers coming in from Premier Explosives. Yeah. There was a marginally high top line growth, but the actual EBITDA margins grew by almost 14% after there was a reduction in the costs, which fell by around 19%. Basically, this company is the only solid propellant player which supplies missiles to the Indian government. So the numbers, let me walk you through the numbers. The net profit increased by almost 4 times to around 6 crore odd rupees, and the margins increased by around 14.7%. The second stock, Agam, is definitely your stock. It's actually Radico Khaitan.
Yeah, sure.
So basically, the top line growth was there basically because of the festive season and the new launches which had come, which has aided the top line growth. And apart from this, the easing raw materials prices also led to a margin expansion of around 130 odd basis points. Apart from this, there's DB Corp coming in with a really good set of numbers, which was aided on account of superior ad and print revenues. So the revenues were up by almost 11% at around 659 odd crore rupees. But there was an EBITDA beat. This was mainly due to the radio section's EBITDA growth, which was almost around 40%. Apart from this, I think, Agam, what we should be looking for will be the increasing DVAP rates and the softening of newsprint prices going forward in the Q4.
Okay, Sharad, thanks for joining us and getting us that list of stocks. So some of those were also moving in trade, largely on account of earnings. And earnings, it seems, are the order of the day, and which are actually moving the markets essentially. So we're going to keep bringing you more developments and updates with respect to the same. And on that note, it's a wrap on the markets, but lots more lined up. Stay tuned to Bloomberg.